Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Delighted I've asked Christopher Gerteisen. He's the CEO of Nova Minerals. ASX code is NVA. Now, Christopher and I spoke a year ago, and since that time, they have made great strides in their project up there in Alaska. Now, this is the Estelle Gold Project, but it's not just a project, it's a whole district. And for those of you that know North America and you know the Carlin gold trend, this is it's very similar to Carlin, which was the one that made Barrick Gold and Newmont, pretty much company makers. Now, this has got some similarities. So I just want you to bear that in mind as Christopher and I go through where Nova are right now. They've got plenty of cash in the till, not that many shares on issue. So what they've done and the strides that they've made since we've last spoken, scoping study out, phase 2 about to start. So we're going to go through a few of those things, and Christopher will explain to us why he thinks right now they've made such good strides and where they're at. Christopher, great to see you. Thanks for coming back on Small Caps.
Great to be with you again, Kerry. Long time no speak. Too long.
Too long. We won't leave it that long next time. But Christopher, given that it's been a little while, give us the brief overview of Nova Minerals right now.
Right. So the Estelle Gold Project, as you introduced there, located in Alaska. We do call it the Carlin of the North. It's not just a one-hit wonder. It's not just one mine or one deposit. What we found is we have a 450 square kilometer claim block here, about 90 miles as the crow flies from the main population center here in Alaska, in Anchorage, our main city. And to date, we've defined almost 10 million ounces. So we began really in earnest in 2019 with our first maiden resource of 2.5 million ounces at our Corbell deposit. And since that time, we've just been going nonstop. And we've defined almost 10 million now at 2 deposit areas. Corbell in the north, which is our bulk mineable resource, very, very large, massive resource, almost 1 billion tons there. And then which is what's really become the jewel in the crown down south, our RPM deposit, where we've just had spectacular intercepts here over the last couple of years. And that's shaping up to be a very high-grade bonanza grade. And we can talk a bit about those resources. But in between Corbell and RPM, we have 20 other known prospects at various stages of advancement, including the next cab off the rank here, which is our Train prospect. And what we see there is from our surface exploration is another RPM style target. And it's actually very close to RPM as well. So we'll be drilling that as well this year. Our plans are to hopefully establish a third resource deposit at Train. So we've been focused on the gold, and we are a gold company. However, our exploration has shown that we also have very exciting high-grade gold, silver, and copper hits in polymetallic systems, kind of in the center of the claim block, which we'll get into within our exploration programs as we move forward. But that's it in a nutshell in terms of the Estelle Gold Project.
Okay, before we get it back into Estelle, you've also got some strategic investments. I think it's important to explain a little bit about the rationale behind, for example, Snowflake Lithium, the Rotorex project, and Azra Resources. Can you just explain how they fit into the overall picture?
Sure. So, we don't want to dilute the message from Estelle, but absolutely, it's important to note these strategic investments. So, Snow Lake Resources in Manitoba, Canada, that was a project which we, the team at Nova, built up as a private company. And in 2020, I believe it was 2020, we IPO'd that, and it was a very successful IPO. The IPO price was $7 a share. And it subsequently ran up to $14, I believe, for over a period of time. And since that time, it's come off quite a bit. However, in the interim, from the IPO until now, Nova has managed to take $18 million off the table. And that's what funded all of our drilling last year. So no dilution to shareholders. We funded all that work we did last year at Estelle through the block trade of Snow Lake shares. And now we believe that, it's been a bit of a bumpy ride with Snow Lake. They have a separate management team listed on the NASDAQ, but it's a new management team over there, new board, back on track. They are going through the resource update and to come out with a PEA this year as well. And we believe that'll turn things around for that and add value to Nova's existing remaining shareholding. We still hold 37% of that company, about 6.6 million shares. So current share price, it's about $13 million US that we hold very liquid in Snow Lake. And we expect that number to go up once PEA and resource updates come out. So that's Snow Lake. Rotorex Aircraft Manufacturing. It's a bit strange. Why do you have shares? We have 9.9% in Rotorex Aircraft Manufacturing. Long story short, we got involved with that company because they're developing heavy lift drones. And we use helicopters at our site. The benefit of heavy lift drones is that they're a lot cheaper to purchase. They are a lot cheaper to operate. They are much more stable, and with the four rotors, much more stable in inclement weather. And so there's many benefits to these. Also, they can be ultimately made autonomous. They can be made autonomous, be manned or unmanned. And so that was our initial interest in Rotorex, and that's how we got into that share. Now, if you know anything about this space, they're also involved in urban air taxis, and there's been urban air taxis in the agricultural drone industry, and they also have some numerous military contracts. That's actually the history of the guys behind it. They're aeronautical engineers that do a lot of military type aerial vehicles, and so they're getting ready. I think they've been very successful in 2 years. They're generating $10 million worth of cash flow now. And getting additional product online, and that revenue will be set to increase here, and so they're looking to IPO maybe next year. We'll see, but that could have a significant value to Nova as well. So that's Rotorex. Azra, of course, is an ASX listed junior exploration company. Been mainly focused in Western Australia there on gold deposits around Tarmula there, that area, around in there. Also, they had some previously on the Zuleki Shear Zone. I think they JV'd that. But more interestingly, recently, they've really been focused on some rare earth discoveries, and that's also a liquid asset. And Nova holds approximately a current share price. I think it's about $5 million worth of value in the shares there currently. So that's our strategic portfolio.
Okay, but that's a strategic portfolio. I think it's important to note that the Snow Lake, that actually funded, and it's really important for people to understand this, that funded last year's drilling. So you didn't dilute shareholders, but you managed to do a lot of drilling last year. So talk to us about what that achieved for Nova.
Right, that's an important point. And remember, there's still 6.6 million shares there in Snow Lake, which are very liquid, and we can always tap into as required in the future. So last year we drilled approximately 30,000 meters, mainly focused on infill drilling at RPM as well as Corbel. And from all of that drilling, we just released our resource update. It's been a long time coming. Very painful with the assay lab turnaround and a number of other issues along the way. But we finally came out with our resource update yesterday, the news release. And at a high level there, I'm happy to report that our resource is now 9.9 million ounces. So that's an increase of 300,000 ounces for the global resource at Estelle. And within that, this was one of the main kind of objectives of last year. We've now gone to RPM, which was previously just an inferred resource, and now we've defined measured and indicated resources. And so we've defined in the measured and indicated categories at today's prices, 340,000 ounces there at today's prices. That's $700 million worth of value that's sitting right on the surface in a very coherent core zone, which will form the basis. I believe, when you have that measured and indicated on the surface like that, it'll be where the starter pit will drive down on when the phase 2 scoping study comes out here in the next month or so. And the measured portion, for sure, you can consider those money in the bank as reserves. And the measured and indicated pretty close to 100% of that value will be extracted in a starter pit in those initial pit stages, pit optimizations when it comes to mining that. So that's very exciting. That's $700 million worth of value at the current gold price that we've established at RPM. That's high level. So that's what we've done. So we find that to be very exciting news, very positive. Now let's dig a little bit deeper in terms of the resources. So what we found, as I mentioned, most of the drilling was focused on infill drilling. And so what we found at both deposits is that things, if you actually dig into the numbers, things have tightened up a bit, and which is typical what you get. So let's go to Corbell. At Corbell, we've through the years we've expanded. The drilling spacing's always been very broad, very wide spaced, and hence inferred resources, and it's always expanded and expanded and expanded. And this year, eventually, you come to the boundaries of a deposit, and that was reached this year. We reached the boundaries, I believe, of the Corbell main deposit. You're starting to see it pinch out to the north and south. I mean, it still keeps going, and it could blow out there to the north of Corbell main in the Isabella anomaly area, and that's for future testing. But to the north and south, it's pinching out. We're definitely seeing on the east a very sharp boundary, some type of a fault boundary there, and on the west as well, we're seeing a boundary there as now. So that deposit, more or less, there's still some opportunity at depth, but more or less that deposit is closed off now. And so the amount of ounces there have contracted a bit in the latest resource update with the infill drilling. As we've infill drilled, we've gotten tighter, and we're very happy now that we've come to the boundaries, and we were able to, that deposit is very well defined now. And we actually increased the indicated portion previously slightly from 3 million ounces to now 3.1 million ounces at Corbell main. And the total resource at Corbell main now is 6.6 million ounces. Where we made up additional ounces, which due to the finding the boundaries at Corbell main, is a nearby zone in the Corbell Valley at Cathedral. We also drilled there now, a maiden resource program, and an exciting result, right? It's the first drilling program, and we defined 2 million ounces there. It's absolutely amazing that you can just drill a relatively few holes here at Corbell in particular and define 2 million ounces in the first go. And that's what we've done at Cathedral. And at Cathedral, we drilled underneath. Cathedral is like a bit of a peak. It's like a bit of a knob there. And we drilled on the base of that, and we drilled underneath it. And we've defined a very broad zone, similar style of mineralization as Corbell main. What we need to do there is go back and get on top of that Corbell knob and drill into that, where we had some very high-grade rock chips, up to 114 grams per ton there. So there's still lots of opportunity there for some higher-grade portion of Cathedral. But there's no doubt that we've established now at Cathedral, which is still wide open, another Corbell main type of an ore body, at least, at a minimum, right? So that's low-hanging fruit, something for us to go back to in the future to continue to expand ounces there at Cathedral, and the Corbell Valley there is a gift that never stops giving. However, you only have a limited amount of time and resources and these type of things. And so the majority of our focus will be this year will be at RPM, or down in that south area, right?
Okay.
Around RPM. And so let me just talk about the RPM resource. So the RPM resource, also particularly the RPM North Zone, which we're all very excited about, and many people are very interested in. And so the initial resource there was much larger, right? In terms of ounces, 1.5 million ounces. We've come down to 830,000 ounces there in that RPM main zone. What's the reason for that? So the initial resource was all inferred. And people need to understand, Kerry, this is why you have resource classifications, resource categories: inferred, indicated, and measured, right? And so at the inferred stage, you have a limited amount of data. Things are still wide open. There's opportunity for models and resource models to go into zones where there's no data, As you infill drill and you tighten things up, not uncommon, you typically start to define and things become more constrained. And we've certainly seen that at RPM as well. What we're seeing at RPM, initially we thought that was a zone that's extended out to the west, wide open to the west. When we come to drill it, we're actually seeing it's pinching out. It's pinching out there. There seems to be a fault disruption to the west. Also, another factor there of losing some tons in the new resource versus the old one is that initially with the limited data, we thought the ore body was dipping moderately to the north. When we came to drill it behind there to drill it down dip, we actually found it's not. It's actually vertical, vertical, and so that all those tons now that it's become all those tons dropped off that were initially off to the north. So we lost some tons there as well. What we see geologically, we took a lot of geological data. All of our drilling, of course, is diamond core, highest quality HQ diamond core, fully oriented. We did a lot of structural modeling, structural analysis, looked at all our geology. What we think that RPM North Zone is just kind of an island that sits out of there. We think it's a sheared off piece off the main intrusive at RPM, which we're intersecting at depth at RPM North as well as RPM South. And so the size of RPM North, we've lost tons there. The size of it is smaller than initially envisioned, but we think we know the source of where that piece broke off, and it's that main intrusive. There's still some opportunity at RPM North. We're seeing some down plunge, kind of an ore chute that goes down, so we tend to test that at depth. But really, most of our focus in this year's drilling program will be on the mother intrusive, where that RPM North comes from, and we have about 15,000 meters, I believe. So far, we're still in the planning stage that we'll be drilling that intrusive. We've already drilled into it. We've established that it's mineralized there as well. It is potentially indeed the mother for RPM North. Some intercepts that we've already received there from the first two holes there, 76 meters at 1.2 grams per ton. That's not too shabby for a first stab at it. And that was at depth. And so now we're going to get right on top of it and drill that out this year in kind of a more grid-like fashion. And we expect that to have some pretty significant implications for resource upside at RPM North. Bottom line, the RPM story is not over. It's just getting started, really. Okay, it's just getting started. And what our drilling programs intend to do this year is take advantage of some of that resource upside that we believe is definitely there. We have a very good geologic understanding of RPM now at the time. But what we did have, and I've already mentioned, and I'll reiterate here, is we've established with very close space drilling, measured 180,000 ounces and measured 340,000 ounces, measured and indicated right at the surface. Basically, we did get straight into it. There's a year or two of production. And what that gives us is, when it comes to the scoping study, early payback, right? Very early payback, and that'll work wonders. And for our key economic metrics, such as NPV, IRR, these type of things. And so we got that. There's these type of starter pits right on the surface like that. The few that you've seen through over the last few years and other deposits. I mean, company have gone into bidding wars trying to get a hold of this type of a resource that's sitting right on the surface. $700 million of value there for our shareholders right on the surface once we get into RPM.
You actually just said something that I was going to pick up on, which is, a bit of a bidding war. We know that Newcrest, Newmont are in a bidding war at the moment, and freshening that up a little bit. What's your plan? Is somebody going to come in and take a look at the size of this and say, you know what, let's have a look at this? You might not be able to talk to that, but there's a lot of M&A activity going on at the moment. I'm kind of looking for guidance from you, Christopher, for shareholders and viewers out there as to where, I guess, the milestones, the value, the shareholder uplift is going to come, because the share price hasn't done a whole lot this year. I'm sure that you're wanting it to be a little bit stronger, but give us a view on that sort of value uplift and where you think that's going to come from.
That's right. So just to be clear, we're an aspiring gold producer, right? So we're not here to flip the project or so that's not our game. We're aspiring gold. Now, that said, of course, we're always, we're in the industry. We have a lot of companies have us on their radar, including majors. To be clear, again, no deals on the table, of course, but we're definitely on the radar. The interest in this project has grown. We've seen that grown significantly. They're interested in, they see the asset. They're not looking at share price. With this, you're either a trader or you're an asset holder, right? You can't be both in many ways. And so, of course, these companies, they're looking at the asset, right? They're looking at the asset, and that's how we view the asset. We're fundamentalists. We know whatever the share price is doing from day to day is of less of concern than the asset. And we see, value. I've just mentioned some of it that we've just defined, $700 million that surface. And so what some of these companies are looking for, they're definitely sniffing around on the radar. We talked to them, some of them on an informal basis, and had a few site visits and things like that. And we're always open to a strategic partner, someone with a lot of muscle and the human resources and the capital behind them to go into perhaps, who knows what that deal looks like. But we're not here just to flip the project. Let's just put it like that. But a strategic partner, one of the majors, for sure. Some of them are looking for us to get to PFS, and I think that's once we finish this drilling program this year, we'll be much closer to that PFS level. Also, what I want to mention this year is not only are we drilling at RPM, Carrie, we're talking about adding value, right? So not only drilling at RPM, we talked about the resource upside we intend and hope to capture there further RPM, but also this year, we're drilling our Train prospect. Mm-hmm. So at Train, there's a news release that came out, I think about 6 weeks ago, people that can go refer to. But at Train, what we've discovered there is the Train prospect, approximately a kilometer strike, 500 meters of width, where we get up to 80 gram per ton rock chips, 2030s along that surface exposure. Then 1.5 kilometers to the north, another ridge line, where we've made another discovery we call Trumpet. And so, that's northwest of the Train prospect, very strong regional structure here that controls mineralization going northwest. And so there's already some early indications, a few samples in between those deposits. Those two may connect into another one of these massive mineralized intrusives and intrusive systems. And also to note is at Trumpet, we distinctly see a Hornfels intrusive contact. What that means is it's an RPM style target. That's the distinction there. So an RPM style high grade target, certainly we're seeing those kind of numbers on the surface. We intend to put the first holes into the Train prospect area this year as well. And so we hope to drill enough holes to establish our first maiden resource at Train. That'll give us a third resource area that we're working on. Corbell, RPM, and then after this year's drilling program, the Train resource we're looking at. That's one of our objectives this year, to get that Train resource. And we believe it's an RPM style target to add to those high grade resources. So something like that coming online adds further value, which will just be making some of these potential partners licking their chops, I would say.
We're running out of time. I want to just mention a couple of things. Very small amount of debt, I think just over 7 million in debt, but your cash balance at the moment is, am I right in saying about 45 mil? So you're not talking to me doing any sort of capital raise or anything like that. You've got plenty of cash in the till to be able to do what you need to do this year. Yeah,
we have around 25 million Australian cash. And then, of course, some of these liquid assets I've spoke about, Azra, Snow Lake, 13 million US there that we could draw on if we need to. We have, as we move forward here, it's some crazy economic times, geopolitical chaos. It's all over. So we are closely monitoring kind of the macroeconomic and geopolitical situation, and we have a plan A, a plan B, a plan C, D, E, and F of how to progress here, and we're very flexible. We have long-term contracts. I have drill rigs committed on site that I can turn on and off, pretty much not on a daily basis, but we can turn on and off as we need. For example, sometime if we wanted to wind things down or a couple of rigs down to preserve cash at some stage, we could easily do that. So we have a lot of flexibility. We've set ourselves up for that. And we have, like I said, numerous plans in place to scale things up and down as we move forward here for the rest of the year and into the drill season.
Okay. As I say, we're running out of time. Just very quickly, access. There's an access road that the government is getting involved with, which is going to give you year-round access, which when we last spoke, you could do that pretty much anyway, but this just makes life a lot easier, doesn't it? Just touch on it briefly for me.
Indeed, it's gaining major momentum. There's been a recent poll came in on our. Check out our local newspaper online, thefrontiersman.com. A little plug for those guys. You can see that they released a poll of Matanuska Valley residents here. Overwhelming support. 60% basically say, yes, we want the road no matter what. And 7% saying we oppose the road no matter what. And that in between, they just want to know more, right? They just want to know more. So gaining major momentum. It's a state-funded project going through EIS as we speak, going through EIS. The state plan is to start breaking ground on that road in 2025 and to have it fully open for business in 2028. Now, it's a long road to get there. We've already been involved with ADIA, the state authority there driving this project, in public outreach and public outreach conferences and things like that. And the engagement's just been great. And I think that it's all on state land. Remember that, no federal land, no native corporation land to contend with. And so I think this is it's very positive, moving in the right direction. And most of the stakeholders, almost all of the stakeholders are getting very excited about this, to build the first real road in Alaska in the last 34 years.
Yeah, and it opens up the whole province. Right, Christopher, give me 3 reasons. Let's wrap it up in a nice little bow. 3 reasons why you think right now is a good time for people to be sitting up and taking notice of ASX code NVA, Nova Minerals.
If you look at the recent share price drop, buy the dip for sure. This is one of those situations, I'm not an investment advisor, but there's no greater opportunity to buy Nova Minerals than these times. Buy low, sell high. That's what you want to do, right? The project is moving forward now into the scoping study. Phase 2 will be released. There's no doubt, I don't know how much, but with RPM included in the production schedule now, you look at phase 1 scoping study, some minor tweaks, but the only real difference is now you're getting that high grade resource in the production schedule. So that's going to be positive in terms of the bottom line numbers, NPV and these things. That's exciting in the short term. And then all the exciting PFS level, we're moving into the PFS, the exciting drilling programs that we got coming this year at RPM for resource upside, and as well as at train for that third resource and an RPM style target there in the south area.
Christopher Gerteisen, it's been.
I got more.
What more?
I got more.
You got one more.
Well, and it looks like with the West Susitna Access Road, we've already touched on it. There's major support to not only get access to the resource development in the West Susitna Mining District out here, because it's not just us out here, Carrie. There's copper projects, there's other resource projects out here. The state of Alaska needs these jobs, and that's why you're seeing such widespread support across the whole spectrum of Alaskan society, government, local and state, as well as the local community. And the locals want that road because they want to get out there, and I want to get out there as an Alaskan now to do some hunting and fishing and some new terrain.
There we go, ladies and gentlemen, hunting, fishing, and of course mining, and of course my favorite commodity, you all know this, it's gold. And with the gold price, again, today I looked, it's over 2,000, which is over 3,000 Australian. It's a great time to be in gold. But for now, Christopher Gerteisen, great to see you, and all the best with the future drilling. Come back and give us an update as soon as you can.
Thanks for having us, Carrie. Look forward to the next time.